Good afternoon, ladies and gents. Let's start off with the disclaimer. Investing and trading in the financial markets impose substantial risks where one can lose all or more than an initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. Right. Nice trend week, I could say, depending on what asset you were trading. The time right now is a little after 6 o'clock on Sunday, June 14th. Let's get it started. I had everything prepared so that way I have to sit with me while I load up stuff. That's just a complete waste of time, so I made sure things are slightly ready. What can we start with? Let's start with nat gas. I guess that's easy because not much to go over there. All right, we're going to erase all these drawings because as I was told, it's good to know where you came from to understand where you're going. And I believe that, it took me a while to understand that you have to understand to where a chart pretty much, what has it told you in the past in order to pretty much understand where it's going in the future. As many people would tell you, you don't know what's going to happen in the future. You trade what you see. The charts, they tell a story, and they pretty much tell you where they're going or the likelihood where it's going. It's like a if or then statement. If this happens, this shall happen. And let's erase this so you can see all these lines, I guess. Change. I don't think it was that one, no. It was, okay. All right. We identified, let's go back to a weekly at least so you can see it a little better. Again, this is natgas/NG. If I'm ever trading nat gas, it's usually in the QG. It's in a smaller contract. I usually don't trade nat gas. If anything, I don't trade the NG specific contract. All right. We originally identified that a lot of other assets were giving you these aha trades. They will revert back to old long setups or short setups, whatever the case may be, and we identified nat gas as doing pretty much the same thing. I believe. Let's see if I'm right, because again, it's always good to know without looking or reading something, know where it was at. I believe it was from these 1999 lows. Then from these 1999 lows, highlight a little bit. To these April, May highs. All right, that gave us our original anchor after the trend break. Pretty much we was in shorts all prior to this, and we had broke it, I believe, with this move. Yes, with this move, we came down. We just consolidated ever since, and this was the first measure move that held. We went into one traditional. And from there, we just went straight up in extensions. 1, 2, 3, and this one failed, of course. But then as you notice, we came down right into original support. So pretty much since then, since 2099, you can say, yes, we traded in the range and we had these wild swings, but since then we found support at that original anchor. Now moving forward, that's your original support. But the thing is that you can't, keep holding along, obviously. So it's just when do you break? It's just take it as a range trade, pretty much. When that extension breaks, any time that extension breaks, I would just book it. I would just book it. And this will be the first time in my life that I'm going to be getting into nat gas from an original support line. All right, and the next original support line is now from these 2012 lows to these, I guess, July highs. All right, so now we're trading it, and we traded it sort of beautifully. I didn't even notice it. I noticed late, and This is going to be the first pullback I'll be buying, hopefully either tonight or Monday morning. And we'll see what just happens from there, pretty much. I mean, we can only take it a step at a time. And this is coming up. Let's highlight it. All right. These are already traded. You know, if I would have drew it perfectly, it would have not showed the dip then, because these anchors are wrong. Let's actually use my drawing. So I just wanted to show exactly where we came from. So let's load the anchors up. Okay, much better. See how that didn't dip in? I always save the master set, but I always try to show everybody, you know, how did I get these anchors. All right, this is a weekly chart, so let's boil it down back to, I guess, the 15-minute, so we can get more intricate. All right. Let's make these the dominant. Okay. Okay. And now these ones. Let's just erase everything else from there. Let's remove that one. So let's see where we're at right now. All right, these are the weekly time frame fibs. All right, this is the AHA long, pretty much. All right, so this is why I put it in a solid line adverse to a dotted line. Right? So now we're working off of these lows up. All right. This mouse is killing me. Okay. This one didn't hold, but this gap upheld. That's why I marked it. From these 61s up, that gave you your first move up. That gave you your next. And now this one broke. So what can we expect from here? A full pullback from lows to highs. And this will give you your support. And I believe it should be at the 273, something like that. All right, let's just see that 2556 up to the highs. You can say we're even trading it. All right. See, the lows were 744s. These are the 7.4s. You can say you can make a case that hasn't traded. I mean, but then you can look at what bonds did this week. You didn't get your trade, and people front ran that by more than 12 ticks. So what I can say from here is either watching this line, waiting for these to trade, because I believe I have my orders in actually with a slight dip in. You know, I want it to fully trade. So we'll see if that happens. If not, just watch for the short to break. All right, of course, you're not going to get the bottom price. Waiting for the short to break, meaning you wait for this to break and then buy the immediate pullback. So you have two ways to get in, you know. Then of course, if it just fails completely, then you know I'm not sure it's a no trade. All right. I'm only going to take this long if this holds up. These 2696s, you should not trade lower than that for this long to be correct. And then your next measure move, you'll be targeting at least to take some off the table, because you know you don't fall in love with a position. You get hurt that way. All right, you're gonna take some off at minimum off the table, either some or full out at the 3009s. All right, so pretty much these are very close to trading. I would be keeping an eye on this in the coming days, either tonight or Monday or Tuesday. Okay, it can probably just start to fake out, start to trade higher, but then still come back down and slam into it. So just be on the lookout for that, right? Because I would say these did trade, and your first profit target on these anchors are well up at the 3.6s, a long ways up. So this is how you get into it on these smaller risk bands. Instead of risking this much, you're risking now this much. All right, so let's move on. Let's go right into it since these AHA trades and these other long setups are coming up. Let's go right into bonds. Okay, let's get rid of this. I'm gonna keep my original anchor on so that way we go right into it. I don't want to waste too much time today, only because the market is open right now. I like to do these videos early in the morning so I can lollygag on them, you can say. But right now, market's open and trading. I want to see what's going on. Okay, bonds pretty much coming into support from these October 2014 lows. So 2014, here it is. From these October, December 2013 lows up into these most recent highs, 2015, we're coming into some big support. And bonds, if I'm not mistaken, front ran that support by a few ticks. Yeah, just by a few, not by much. We was waiting on 147.10s, and the low came in 147.16s, 17s. Front ran by 6 ticks. What that reminds me of, real quick, I just want to just pan out, just get out of this drawing. I want to go to the ES chart. Just real quick. What that reminded me of when it happened, let's hide all these. Let's not use. Okay. Let me just show you what this reminded me of real quick. All right, it was a big setup. It was from our extension that we're trading at night right now, from the 2007 highs to the highs of 2000. You can say not really the highs of, but before the October dip. All right, so pretty much, let's get that right date so you can see what I'm talking about. From the September 2014 candles. All right. You notice how when we came down, geez, if this mouse will not go crazy on me. That reminded me of that October dip from last year that we front ran it. I had orders sitting out. It actually wasn't that 1800. The number was slightly different because contract growth. But pretty much I had the order sitting out right on support, which never got filled. And you better believe I had to chase that up because we was going around sending messages to each other. Do you think that traded? Do you think they front ran it? And they front ran it. Obviously, in hindsight, they front ran it by, if I'm not mistaken, it was well over 20 ticks. And that was harsh. When you see something like that happen, that's because there are a lot of orders stacked below. And you better believe somebody who's reading the order book, they see where all these buys are at, and they'll make the buyers chase it up. And when you see that kind of thing happen, you know it's bullish. It's get in it. It's gonna start ripping. And of course, you can see we had the straight V-shaped recovery from there. I mean, this bull run since 2007 it has been remarkable. Since we based out and broke out the first time, it's been nothing but V-shapes up. People have been literally buying the dip, and it's a competition to try to get these low levels. So that was a chase. So just to go back to what bonds just did, I mean, a lot of people are eyeing that level, and it's gonna make me, adapt, because it's gonna, when something is coming that I know that I want to get into, and I know what the trend really is, people are front running it. I mean, that wasn't such a big front run, but at the same token, it's It didn't. You can say it didn't trade. Right. Right. That was 6 ticks. All right. ES was a lot worse. It was well over 20 ticks, and that's a big front run. Um, I mean, because obviously you're risking a lot more to not know if it will trade or not, and sometimes you just don't know, and it's viewed in hindsight. This is why we'll wait for the short to break and then buy pullbacks, or being more courageous, or I would say bold. You would just have limit orders out, just sitting there and just buying the dip. Right, you're doing what others are really not doing. Right, it's usually a hindsight bet. Right, so where's bonds at right now? Again, you can say they traded. I still don't. I'm just trading cautiously. Right, meaning that I'm not taking a full size position. If not, I'll work into a full size, meaning I'll trade it. I'll add some books, until I pretty much I pay for this risk tolerance, and then I'll get full size from there. But I don't want to say it's safe to say that it's a long, but I just don't know. So again, I'm pretty much in the shoes of others. You had one. Let's see what happens. Hans, what did you do? You had one traditional. Went to the tick. Gave you a risk-free setup, meaning you could have literally brought the line of support and you could have put it pretty much as you just have to pay for commissions if you lost. That's what you call a risk-free trade right there. And then from there, you went to profit target. You had another traditional. Let's erase this. Man. You had another one. That was 2. This one didn't trade, so let's see if we're going in extensions. And pretty much the extensions broke. Alright. So what I can say is pretty much wait for your full pullback again. It may go higher, but that doesn't mean you need to be chasing it. Alright, so whatever the high print is, you wait for some red candles to show up and you just draw from there. So pretty much I would say from here to here, waiting on 140, 149.19, and you better believe I'm throwing bids out there. So this is the pullback I'm going to be waiting on. Before I started this video, I just booked the majority of it. I'm only holding one contract right now. Everything else has been booked, so I'll buy it all back as soon as we get down here. And of course, my stop will go here. Get stopped out. It is what it is, and then I'll just try to see if we can buy lower, and we'll eventually we'll be hoping that this level trades. All right, it really digs in. If not, then we're set to go. The bigger targets well above. All right, this is how you get into something like this. All right, well above at the 176.04. You do the math, that pay your mortgage for the year and some change. All right, that's talk about bonds and interest rates. All right, let's move on. Oil. Okay, I'm just going to get rid of the smaller lines, I guess. See where we're at. So this is a daily chart there. Okay. Oh, yeah, because we're talking about net gas and its old AHA trade. So real quick, just want to show you where we came from. All right, the support that we're running into was from when we originally broke in the short. Oil trades the same way like nat gas. It's a commodity, obviously, but there's times it goes into trend up and trend down situation. All right, so this is the original long setup, and I may be drawing that wrong. But pretty much, I don't want to get into it, but pretty much it runs into the same support level. So everybody waiting for sub $30 oil, good luck with that. You'll be waiting a very, very long time. So pretty much, again, we're trading that same old support level. And you could think of this, again, like a range trade or a box trade, where these 94 areas, it's pretty much, it's not to say it's peak oil price, but that's where a lot of the majority of the, I guess, the deviation of the upwards momentum, that's where we'll pretty much end at. And this area over here in the 43s, that's where pretty much you will get your low prices in those deviant quadrants. So pretty much just think about it as a range trade. There's nothing else to say from there, but where are we at right now? All right, let's get rid of this one too. I don't need it. I'd say you don't need it, but it's not in play right now. All right. Okay, now from these March lows, you had one traditional. You can't even make a case that was two traditional, so you had one traditional, and from there you went straight up in extensions. This being your anchor. Okay, so what that looks like on a chart where people would draw all these funny trend lines and stuff and whatever that's meant to be broken, in my opinion. All right, you're straight up in a bull flag. That's what that looks like. It's a bull flag. And you have the lower end. Let's bring it down a little bit so you can see it. Your lower end of the bull flag is everything from $57.50 down to about $56.30. All right, anything below that is wrong. All right, so meaning that this long trade is invalid with a print below 56.32. All right, so you have your parameters there. And on Twitter, I just want to say I'm gonna stop giving out all the micros, all the moves in between, because it's sort of dangerous to the new trader, to where, you know, I'm saying I'm buying a level, but little did he know I got out only because that micro was invalid, and it's only likely to walk down into major support. All right, again, a range trade. You try to get these low levels. That's where you accumulate and hold with a stop below here, and you're targeting up at 65. All right, so again, I'm gonna stop giving micros on Twitter, only because, you know, I hate to see other people get chopped up on levels they could have got at better prices. So pretty much anything above this, you know, if you're getting in or initiating a trade, it should be a small trade. And if it's a day trade, you let go of it. You don't fall in love with that position. You hold this area and nothing higher. All right. So from these Friday lows up to these 61.82s, I can make a case that you're going to come halfway back, and that's about 59.34. Stop below 58.75. If that breaks, there is no reason why you should be holding anything from a cost average above these levels, because you are likely, the probability will increase that you will trade lower. All right. So with that said, I know I had brought, I believe we was running extensions. I just want to show you what happened to me. Okay. Originally, I had banged this level because I got in on it, and the majority of my level was held from these areas. So when I had added on that Friday, I added again. I'll show you. Oh my God, I'm gonna. Okay. I had added here. This was me adding this area, and like an idiot, I did not book profits. I was actually, and I was entertaining myself in another asset class, so I really wasn't paying attention to oil. And I brought, and everything was good. I could have got out at a decent profit or something in the bank, but I got stopped out that following evening. All right, it is what it is. All right, so that extension broke, right? Because sometimes when things run in extensions where they just appear on a chart to go straight up, this is how you get into something like that. All right, but like an idiot, I didn't book it. I thought it was going. I thought I had an opinion was going to continue higher, and it didn't. So everything is just straight rangy, depending what you're trading. And can I get rid of this, please? Thank you. All right. So being that that extension broke, what's likely to happen, one of the two, is these will trade and hold. These 59.32s, I am bidding this area with a slight dip in. So I'm actually bidding 59.23s and with a stop below 58.73, meaning that if 58.72 trades, I am gone with a loss on that. And I would likely book even majority of my core only because I know this level will once again trade again. And then it's just a rinse, wash, repeat. Keep buying the range and just wait for the breakout. All right? I do not buy breakouts. All right? This is not 2000. This is not the tech bubble. We don't buy breakouts. All right? You be a gentleman and you wait for your pullback and you take it until target. All right? So if this trades and holds, we're likely to trade up. That first target will now be 62.99. With bigger targets up, that's a 65 from the core. All right? So just showing you how to get in. Again, got an entry setting up at the 59.32s. We're now trading 59.76s. You enter 32s or anywhere even lower than that, and you're wrong below 73. All right? Just be aware in the back of your mind that oil, when it is in bullish setups, I'm talking about confirmed bullish setups, oil, being that this is a competition, people like to front run the bid. So 59.32s are probable. A legit front run would be 59.36s. Oil likes to front run by 4 ticks. So 36, I would consider 59.32s traded. All right. Anything more than 4 ticks is very questionable. All right. Let's move on. Again, we did gases, and then bonds. Let's go to the spools. Okay. This has been quite a confusion, even including for myself. When rollover comes around, it ends up being a big like, what the fuck happened? Like seriously, that's what it comes up to be like. You know, what levels do I go by, and you know, yada yada yada. All right. Contract roll time. We went from June to Sept. All right. Let's see if I can get both of them in. All right, I'm just gonna erase all of them like always, you know, because somebody's seeing all these lines. You guys will have heart attacks. All right, we're gonna go to the 1 hour chart. I normally don't use 1 hour charts, but because I want to see enough information, but then I don't want to see a whole bunch of candles right now. Oh yeah, if you haven't noticed yet, there's a nice, decent-sized gap down on the futures and equities. If you haven't noticed. Okay. And I'm looking at 6E. How did that happen? Okay. In order to get your levels, when a contract roll happens, you have to use the anchors on the preceding contract, not on the continuous, on the preceding contract. So if I'm looking to get my new anchors for U5, you have to use M5. All right. What happened that day? I'm trying to remember exactly what happened. Give me 1 second. Okay. This is exactly what happened. We needed this anchor from the 2134s up until the contract low of the 68.75, if I'm not mistaken. All right. You had to pretty much simulate this anchor on this drawing if you was going to get into the U5s, because if you didn't, you would have thought that this anchor had broke on this contract, and thus you would have still been trading on the long side, thinking that the long side was correct. And if you did that, you got hacked. Right? You really. I had a lot of problems with this in prior years. I would think the trade still existed up until you got stopped out, and come to find out, if you had dreamed or simulated those original anchors, meaning that a lot of volume on this contract within this time was associated on the M5 contract. So people were still drawing from the 34s, even though if you had drew from the 26s, like basically if you use the 26s as your anchor, it as well broke. But it wasn't 26s everybody had gotten involved in. It was the 34s. So you draw up for the 34s down until the 68.75. You don't draw to this low either, because then that as well dipped in and broke. You have to draw to the anchors from the preceding contract. It's a must. And if anything, once this had broke, all right, it was the 75. I forgot exactly what it was, but it was from this low here to this low. This was that evening before the rally, and you had only Globex traders really had the opportunity. All right. And this is why I said if you broke above the 85s, you're likely to go all the way back up to those 2001s. All right. 2101s, excuse me. All right. So that dipped in, that told you to get out that short. You had one pullback. Right, from these lows to the high that broke, and then from there you went straight up in extensions. It was a stop run. All right, this is the reason why I told you respect the level, because if you did, you would have avoided all of that, and you could have been getting short this level. All right, so where are we right now? Again, from the 2134s on the SEP contract, using the the June contract anchors, 2134s to the 2068.75. That day, I had gotten short pretty much at the 2101s. I didn't even wait. I had things to do. I got short. I had believed I was right. And if anything, I had set my stop appropriately. So I could have had a better price. I sat in that little bull crap right here. I was down hard because I took full size on the EF, the TF, and NQs. I just went in. I thought this was it. This was that stop. This was the stop run that everybody was so happy, and we was making new highs in the car. It was in the books, so you had to get short off of that level. This was a make or break all level, and I defined my risk, and I know where we're likely going now. All right, and we're on the way. But I wouldn't be surprised if we trade this Monday, and just be mindful. Monday, I do not put on new positions I do not initiate new positions. If I do, it's a day trade. I'm gone by the end of closing on the night you close. Only because Monday, you never miss nothing. And you're likely to retrade those same levels on Tuesday. So whatever happens tomorrow, it's going to happen again. So don't get too emotional off of it. And we'll see. This evening, I booked some at 2077. And the rest of them, if we start to trade even lower down to the 53s, I will book all of it. I will flatten out completely. And I would look to pretty much sell the next rip. So that's really it. That's where we are at. And let's see where we go from there. Nothing is a given. I just respect my levels. Let's trade off of these U5s. Let's bring it up. Let's see what's up with this one. Okay, how can you get in on this? I don't advise you to come in Monday morning and start shorting. I do not advise that. And I don't even recommend buying a dip either. I really believe we're in bearish setup, so we have a lot of downside ahead of us. A lot. A lot. All right, from these 07s down to these lows, let's see where we're at. And try to get in on the 89s, stop above that. But, being that this is Fed week, we have FOMC minutes, expect the charts to be slight sloppy. I would really, unless you have a good risk to reward setup in front of you, meaning that we don't come back and trade somewhere up here, I wouldn't be taking trades. Not until after FOMC. Just be if you are, just make them day trades and be nimble because you're going to get chopped up. Charts are less technical. I was taught before FOMC. Knowing days to trade, again, it goes back to rules. Which days do you trade? Right? I probably won't do nothing Monday, just modifying orders or taking profits. I won't be taking no positions. Nat gas I'll make the only exception for. But for the most part, again, I'm not trying to initiate new positions, especially in the equities. All right, where are we likely to go? I have no idea. Let's look at the continuous real quick because we had this gap down 2 times now. And boy, let me tell you, buying a gap down on a Sunday, in the past years, those were profitable. You could always buy a gap down on a Sunday, Monday, and give it a day or two, you'll be in the green on that trade. All right, but I'm not a fan of statistics. I honor them, but I don't trade them. Okay, from this gap down, we had 1, 2. You can't even say that from there. You just had 2. 1 and 2. Yeah, just 2. And then from these lows, let's get rid of that. Probably just another measured move. Nope. Not even that. It's hard to draw these little micros sometimes. Yeah, you can make a case of that because I remember we had high ticks right before 11:30. And then from there, another extension down, which is trading. Let's get rid of this real quick. This is why I told you the next measured move was down at the 2077s. Where are we going to go from here? The thing is that I don't like giving micros because if you're not managing them, you're likely to get chopped up. Even if I told you that from these lows, from the lows of 2081 halves, roughly, or let's make it a little better. From the 10:45, 11 o'clock Friday lows, Eastern time, to these lows, I would only go to the low that pierced the 77 candle. So let's bring that up a little bit. From these lows to basically this first candle right here. I mean, you got to have some balls, but you could short 79s and take profit right at the 73s. Excuse me, you would short 77 halves and cover 79s. But again, it makes no sense for me to give you micros, especially if you can't manage them a lot. It's just going to bleed lower if it can't get above the 79s. However, I would really just hope, and hope is a terrible thing to have in this market. I like to say that for a joke. All right. Hope for all the way halfway back retracement again. Somewhere at the enter around the 93s and stop out above the 98s. But we'll see what happens. All right. It's a fresh week. What else do we have? Euro. Let's go last week to the Euro. It's my favorite. And right now I'm actually getting whacked on the Euro. Speaking of it. Gap down as well with the indices. Alright. I know these levels traded from the 108 up. And the only thing I can make a case for is Friday's lows. Not last Friday, but the Friday before. Basically, June 5th. From June 5th lows to highs. Can't even make a case for that. Really can't. I mean, if you measured it to the Tuesday highs, which I know that's what I'm doing, only because we went from Tuesday, we started to dip, we started to trade down, and we never traded the pull-in. We traded it on Thursday and Friday, and that can lead up to the 114.37s. The bigger trade is up to the 115.15s. So if I get stopped out here, which some of mine will, but my core doesn't get stopped out to 110s, we're just going to keep trailing them up. I just go into some sideways crap now, but it is what it is. This is the reason why I buy pullbacks and I don't buy breakouts. I'm not really experiencing pain other than the immediate pain of just not having as much as I had a few hours ago. All right, it is what it is. This is why you spread risk around. You trade multiple markets, and you take what each market gives you. And that's really about it. With that said, we're going to wrap this one up. Talk to you guys later. I'll post charts with it, and this will be up in hopefully roughly an hour. Peace.